Hello everyone, welcome to Tuesday. And every Tuesday, as you know, we take a look at the performance of the NZSX 50 and just see how that's going for the week. Before I do, remember this is for educational purposes only. It's the methodology I use that when I'm looking to buy particular stocks within the New Zealand market, I obviously like to look at the main indices and see how that's been performing as well. If you're looking for personalised financial advice, remember you do need to consult your own financial advisor. But remember, I do have a share trading signal service that's free for the first 30 days that I'd love for you to take a look at. Just as about cutting down the noise as to perhaps what stock selection is available and hopefully helping you perfect your trading journey. So let's take a look at the performance of the NZSX 50. Right, I have got the NZSX 50 up here on the screen, and I'll just sort of zoom in a little bit. I've got this over the 5-year range, and really quite interesting. There's not a lot of volume down here. This last red candle, it looks quite significant. It's about a 1.4% fall, and that is just for the market for yesterday being Monday. I'm recording this today being Tuesday. So there was quite a bit of sell-off. And what we have seen, especially in the US market, there has been a lot of volatility in the 24-hour trading period. Not so much now that the market opened. Things tended to settle down a bit, but there tended to be a lot of reactions, maybe whether it was to do with the President Donald Trump looking at imposing tariffs and things like that. Certainly around Mexico was certainly one of the ones he's looking at doing quite quickly, and obviously China. And whether that has been a flow on to our market, I really don't know. Hate to guess, but quite often you do see that happen. So we've seen, quite a reasonable sell-off just over the trading day yesterday being Monday. The other thing that is interesting too is we've had two red candles in a row, being the last 2 weeks have been negatives. Now last week it didn't worry me too much because obviously we never had that one. We only had the one red candle. But for me, that is something just to keep an eye on. For me, if I see two red candles in a row in a week, then that means I do not want to enter into that share. However, it is important just to keep an eye on it, on the market, on the main board, see where things are at. We'll take a look at the volatility. So we're going to take a look at the ATR. So we've got 245.05, and we'll just divide that where the price is at the moment and just see roughly how much volatility we've got in here. So it works out at about 1.9%. So for me, that is fine. There's not a lot of sort of caution there. But like I just said, there is those two red candles. So to me, it's just a pause and wait and see. We'll also put our moving averages on just to see how that is going. So I like to use the 30 exponential moving average. And you can see there we are still trading above it, which is great. And I will also pop on the 15-week moving average as well. Nothing special about these numbers. What it is about being consistent and using the same numbers time and time again, because otherwise if you use different moving averages, you'll get a result. But if you're going to keep changing the time frame of those moving averages, you're going to get different results consistently. So that's why I like to stick to the 30 and 15. Just means that I'm looking at the same thing on a consistent basis rather than suddenly moving out and doing a 50 and a 100 day or something like that. It's not to say that doesn't work. There are plenty of people that do use that, but again, they're sticking to just the one, being the 50 and 100 day move. So just zooming out there, you can see that this week, the market has being yesterday, has slightly closed below that 15-week moving average. It's not too much of a concern. It's still trading above the 30, which is really positive. But quite often you can see that the markets will come back to those moving averages before they move off again. And you can see that sort of, around this early part here, where back in January last year, we had the moving averages cross to the upside. So that's where the fast moving average, being the 15-week, crossed through the 30. And then as the market started to get away, it came back to it again. Okay. And the market and back here actually of January last year, you can see the moving averages got very, very close to crossing through, but then the market sort of carried on a bit. So we just need to just keep an eye on that just to see what is going to happen, obviously following on from Monday's trading. And that's why I tend to like to look at markets on a weekly basis, because it gives it just a bigger, broader view, if you like, on what is happening. But we will take a look at the daily and just see what's happening there. So again, I've kept those moving averages the same, and they are getting very, very close to crossing. But again, we'll just sit and watch. So for me, because of that, I really wouldn't want to be entering into any new trades because of that. If you look down the bottom here on the volume, there isn't a lot of volume. So again, that could just be a knee-jerk reaction, but only time will tell. So for me, everything's just a pause and hold, certainly making sure that any shares that I have got in my portfolio, I'm making sure that my stop losses are up to date, because that is where my exit will be. And that's really important, is predetermining before you buy any share in the market as to where your pain point is going to be and when you're going to exit. And the important thing too is to make sure is to review it. I tend to review my portfolio every week, and as shares move up, I of course increase my stop losses as well. So eventually they will be in the money. No, I'm never going to sell at a top, because I like to give my shares plenty of room to move. But it means that, hey, if the market turns and it starts moving against me, then I'm in a good position that I can get out without having to sit here all day watching the computer and what's happening with the share portfolios. So hey, hope that helps. If there's anything you'd like to know regarding share trading, let me know in the comments, and I'm happy to help. Until next week, take care.